Cryptocurrency exchange Coinbase recently won approval to begin offering cryptocurrency futures products to investors in the United States. Some people see this as the government finally giving the green light and the go-ahead to cryptocurrency, whereas other people are scratching their heads saying, couldn't we already trade cryptocurrency in the United States? The details matter, and in today's video, we're talking all about what this announcement for Coinbase means. Just as importantly, we're talking about what it doesn't mean. Hey everyone, and welcome back. This is the Part-Time Economist, and in today's video, we are talking all about the recent announcement that Coinbase has won approval to begin offering cryptocurrency futures to investors in the United States. So a really exciting article that we're going to talk about. But before we get started, I want to be clear that I am not a financial advisor. This is not financial advice, so please do not make any kind of investing decisions based on what I say in today's video. With that being said, we do have some pretty big news coming out of Coinbase. As you can see it from this CoinDesk article, it says that Coinbase Financial Markets secured approval from the National Futures Association to operate a futures commission merchant. Now, if you're thinking I've never heard of this Futures Association, I don't know what's going on here. They are a self-regulatory organization that is aligned with the CFTC. So the CFTC is the Commodity Futures Trading Commission. They are the government. The NFA is a self-regulatory organization that kind of keeps its own members in check so that the government doesn't have to come in and regulate everything for them. So one way or another, this is still a form of regulatory approval. So a huge step from a regulatory perspective there, but let's talk about what this actually means for traders, because most people are looking at this and they're saying, couldn't we already trade cryptocurrency in the United States? And this is where the key distinction comes into play with Coinbase, because Coinbase is going to be able to offer futures contracts. All of the other cryptocurrency that you've most likely heard about has been spot trading. So in a little bit, we'll get into why that matters, but basically this is a new way of trading cryptocurrency that lets people hedge the price of cryptocurrency, that lets people speculate on the future price of cryptocurrency as opposed to just buying cryptocurrency in the present moment. Now, up until this point, we have had other institutions that have supported futures trading. However, this hasn't been available for retail investors. It's been available for institutions. So Coinbase is kind of blazing ahead here, setting a new path and making this available for retail investors. Now, what specifically is spot versus futures, and why does this announcement matter? If you've been trading cryptocurrency up to this point on a US exchange as a retail investor, you've most likely been doing spot trading. And spot trading, I like to draw the analogy of going to a grocery store. You go to the store, you give the cashier your money, you get your corn, your rice, whatever the case may be. Now, if you're a business, if you're someone that's looking not just to eat the corn or the rice for your own purposes, but you're trying to establish a supply chain, you're trying to level out your prices. Maybe in the summer, it's easy to get lots of fresh fruits and vegetables, but in the winter, the prices go up. You want to have some price stability. You can enter into something known as a futures contract. And what that does is you agree ahead of time, I want you to deliver 1,000 units of corn 6 months from now at a price of whatever. And this futures contract is basically an agreement that lets you lock in the price of certain items. Now, this is for hedging purposes, but it's also for speculation purposes. If I think the price of gold, for example, is going to go to $5,000 by the end of the year, I could take a futures contract now that says at the end of the year, deliver gold for $3,000, right? And the idea here is that that protects me from the price going up. The person that's mining that gold, they have no idea what the price is going to be, and they would rather have a guaranteed $3,000 now than maybe the price dropping to $1,000. So futures contracts are all about hedging. They're all about speculation. The key point is that you're locking in a price for some point in the future of a commodity usually. So that's the difference between spot and futures. Now let's talk about what this means from a regulatory perspective, because many people are looking at this and they're saying this is the government going ahead giving the green light to cryptocurrency, and that is not the case, because first of all, we're dealing with the NFA, which is a self-regulatory organization that falls under the CFTC. Now, the CFTC has always been a little bit more friendly to cryptocurrency than other aspects of the government. So the fact that the CFTC is kind of going ahead with this does not mean that the SEC is okay with cryptocurrency. So if you watch the news, you see all of these examples of cryptocurrency projects getting sued, getting taken to court. Those are typically being done by the SEC, which is the Securities and Exchange Commission. So they're both the government, but they're kind of two different arms of the government, and they don't have a united policy. So if you're looking at this article and you're saying, wow, the government is finally giving the approval to cryptocurrency to go ahead, that is not the case, because the SEC is actually stepping up and intensifying their efforts to go after cryptocurrency. We saw that they recently pushed back the approval deadline on some cryptocurrency spot ETFs, which are kind of like a mutual fund that holds cryptocurrency. They've pushed back the approval on those. And if you thought they were going to be letting up, we actually see them going in and appealing their decision on the Ripple case. For those of you who do not know, XRP, Ripple, was a cryptocurrency that was sued by the government, by the SEC, and the judgment that came out of that case, many people saw that as favorable to cryptocurrency, favorable to Ripple, and the SEC was not happy with that. They were not going to let that judgment stand, so they are appealing that. They want a second look. So they're still as determined as ever to crack down on cryptocurrency. So what does this all mean? My personal opinion, and again, this isn't financial advice, I think that we're seeing some regulatory approval of cryptocurrency. Even if it is coming from the CFTC, it's still kind of a government organization. It's still a regulatory organization. So any approval is better than no approval. But at the same time, we still have a long way to go before the SEC comes around to cryptocurrencies, if they ever do. So from a regulatory perspective, I think it's a good step, but it's not the end step. From a trading perspective, I think this is going to open up a lot of new opportunities to retail investors. Obviously, futures contracts can be a little bit risky, so it's important to do your own research before deciding if that's something you want to do or not. But it's great to have more options, especially for retail investors that simply weren't able to participate like the big institutions. So, as always, this video isn't financial advice, but I do hope you found it useful, and I'll see you next time.